we are entering into another session, and here we will be discussing about the third major financial decision which is being taken by a finance manager, and that is dividend decision. And again, once again I am saying, all these decisions are taken by a financial manager in order to make sure that there is an increase in shareholders' wealth. So the third decision which is to be taken by a finance manager in order to make sure increase in shareholders' wealth is dividend decision. Now, what is dividend decision? Dividend decision is nothing. It is regarding how much of profit is to be distributed to shareholders as dividend and how much is to be retained into the business from the profit. How much of profit is to be shared, how much of profit is to be retained into the business. So, decision regarding this dividend payment and decision regarding retaining of amount is termed as dividend decision, or that decision is called as dividend decision, and it should be taken keeping in view overall objective of maximizing shareholders' wealth. Whenever decision regarding dividend payment and retained earnings is taken, it must be taken with an idea in mind that it adds on, it increases the shareholders' wealth. It increases the shareholders' wealth. So that is to be kept in mind. Now, when we are going for such a decision, what all things are to be kept in mind? When we are going for dividend decision, what all things are to be kept in mind? First factor affecting dividend decision, or first thing we have to keep in mind when we are going for dividend decision, is that we have to check out the amount of earnings, because dividend is always paid from the previous and present earning. Before declaring dividend, a firm has to keep in mind regarding how much is its earning, how much is its earning of the firm must be kept in mind. Second thing is regarding stability of earnings. Now, earnings will be made by the firm, but it will be always better for a firm to check out whether there is that earning is stable. In a year, if the earning is going up, it is not advisable to declare higher dividends. It is to be checked whether that trend is going in the same way, whether every time the earning there is a when there is a stable earning for consecutive period, it is better to go for higher dividends. Otherwise, it is advisable to go with a lower dividend. So, stability of the earning must be taken into consideration. Whether it is stable for a longer period is to be considered before declaring dividend. Third one is stability of dividends. Stability of dividends means it is always better whenever there is a hike, never go for, as we have said, never go for declaring a higher dividend. It is always better to keep the dividend stable unless and until there is a very notable rise in the profit. The dividend per share is not altered when earning is comparatively smaller. So, it is always better to keep a stable level of dividend, and when there is a noticeable change in earning, we can go for higher dividends. Fourth one is cash flow position. Cash flow position are to be kept in mind. Cash flow position are to be kept in mind because a company may be having profit, but it must have been in various assets or whatever be. If it is not having enough cash, it is always better to go for lower dividend. So, availability of cash is to be considered. Inflow of amounts and cash availability is to be considered when we are going for announcing dividends. Again, growth opportunities. When a company has a chance of growth, most of the company tends to retain more because they want it to take that opportunity, make use of that opportunity. For that, there is a chance that companies which are having chances of growth or growth opportunity tend to retain more and comparatively give lower dividends. So when growth opportunities are there is a tendency that dividend will be less because more will be retained. Again, shareholders' preference has to be considered. Shareholders' preference. Most of the shareholders, if majority of the shareholders are of the preference that they need to get a regular income company, it is better to keep a regular amount as dividend. Whereas if majority of the shareholders are not bothered about what is the rate of income, company can go with that. So what is the expectation of shareholder? It is to be considered. If it is regular income, maintain a stable level of income. Otherwise, it can give higher or lower, whichever is the condition of the company. That is also another factor which we have to consider. Again, taxation policy is another factor. Actually, the dividend paid to the shareholders is not taxable, but the company has to pay tax for the dividend which is being paid. So if higher is the tax, company will opt for paying lower dividends, whereas if tax rate is less, company tends to give higher dividend. So again, taxation policy followed is a factor of decision regarding dividend. Stock market reaction. Stock market reaction means bullish, bearish and stag. Bullish trend, if there is a hike in if there is a hike in stock prices, people will tend to buy because there is a chance every time to go higher. If it is a bearish trend, which prices are falling, there is a chance of people selling it off. If it is unstable also, people will be in average minded. So stock market reaction, if a share price is going higher and higher every time, people tend to go behind that. So stock market reaction can create, if dividend is declared as lower, it can become a bearish trend, whereas it can react positive when dividend paid is more. So that is also in stock market the reaction when dividend is paid. When lower dividend, people may not tend. When higher dividend, people may go for purchasing shares. So that is also another thing which has to be kept in mind. Next one is access to capital market. Those companies which are having access to capital market, they pay higher dividends. When they are having access to capital market, they pay higher dividends. Whereas the companies which are not having access to capital market, share market, automatically they have a tendency to pay less and put more into retained earnings. So that is also another factor. Again, legal constraint is another factor. Legal constraint means by any law, especially Companies Act, if it is keeping any restriction regarding payment of dividend, this much of percentage, or anything is mentioned as per Companies Act, if there is a provision, then, or any other acts, if it is creating a constraint, keeping a restriction on the payment of dividend, automatically company can pay only up to that level if any law is restricting them from paying. Again, contractual constraint. For example, if a loan given by a financial institution have placed a restriction that only after the payment of the loan it can pay dividend above this particular amount or particular percentage, company has to follow that under that contract with the firm. So contractual constraints can also be a factor which is affecting the dividend decision. So these are the factors which we have to consider when we are going for dividend decision. But keep in mind, when dividend decision or any other decisions which is being taken by a company in the area of finance, it must be with a view to increase shareholders' wealth.